Hey, what's up, guys? I'm Cody the Coin Raptor, and I want to go ahead and talk to you today about the dollar cost averaging strategy for Bitcoin and cryptocurrencies. So, I like to go over here to Uphold. Uphold's a website that allows you to do a DCA, a dollar cost averaging calculator. And I like to go ahead and put together an idea of what I expect my dollar cost averaging to look like over a set period of time. So there are a lot of DCA calculators you guys can look at, but I want to just go ahead and show you the reason why I believe in dollar cost averaging as the best strategy for cryptocurrency and for Bitcoin investments. So if you go here to Uphold, I'll have the link in the description. You can go down and you can select the crypto, and you can go ahead and select the amount, and you can go ahead and select the start and stop time, as well as the frequency at which you invest. So just for an example, I'm going to select Bitcoin, $100 every week from October 2019 to October 2022. And we can see here that the total purchase amount is $15,700. The total value at the end of that period is $18,445, or a gain of 17%. Now, it would obviously be a lot higher if we took out the bear market that we're looking at right here. However, that's kind of part of the cycle. That's the cyclical nature of crypto, and especially for Bitcoin. If you were to actually go ahead and compare that against some other cryptocurrencies or against something like Ethereum, we can see here that Ethereum is actually much, much higher. And so you start here with 15,700, and then you end with $45,549, right? And that's a gain of 190%. So basically like a 2x there of your money. And this is the reason why I like this, is because I like diversification. I like to put Bitcoin and Ethereum in my portfolio, and you get outsized returns when you divest outside of Bitcoin, right? But the risk also increases as well. So you can go and you can change this. If you don't want weekly, you can do monthly instead, and you can see what it would be like over the last 3 years or so. It's very close, not quite the same, but it's very close. It's about 170% instead for this. But if you did something like this for Bitcoin, and instead you did monthly instead of weekly, you have a significant decrease in the total at the end of that period. So you have 17%. And if you go to the monthly, you have about 8.5%. Okay, so you can also do other currencies as well. You can do Dogecoin, for instance. Just type in Doge, and you can see this is going to be pretty crazy. But you can see it's still up 1,500%. If you were to dollar cost average Doge for the last 3 years, then you would still be up 1,500%. Okay. And so this is the reason why I really do like having a Bitcoin strategy that's dollar cost averaging, because you don't have to time the market. You don't have to get in and get out. Instead, you're just doing monthly or weekly deposits, and you're buying for that time. I always like to use Chart TA to give me the best buying opportunities, but this just goes to show you that if you're an investor like I am, you can see there are obvious advantages to holding Bitcoin over time, in this case 3 years. And I would say, for me personally, I'm going to be holding for 3 to 5 years at the very minimum when it comes to Bitcoin, and when it comes to Ethereum as well. So that's my strategy, that's my plan, that's the reason why I'm doing this, and that's the reason why I have set things up the way I've set things up. Okay, so let's look at some other time frames. So we have Bitcoin, the purchase amount is still $100 every week, right? And then we're going to go back to October of 2019 instead. So we're going back one full year. And you can see that if you held for about 4 years or so, you'd still be up 75% on your money. Now that's pretty nice, I think. That is a pretty nice gain right there. If you were to do something like Ethereum instead of Bitcoin, which is again more volatile, we can see that the gain in this case is going to be 336%, okay, starting with 20,000 and ending with $91,000. So that's the reason why I think having time in the market beats timing the market, because there's many different points here at which you could be calling a top or a bottom, and you could be trading in and out, or you could have just held through it and you'd be up 336%. So that's the reason why I really do prefer having a dollar cost average strategy instead of trying to trade in and out. But I do like to use Chart TA in order to give me the best buying and selling prices that I can. Okay, so if you guys like this content, please let me know. Like, subscribe, and go ahead and follow me on Twitter. I'll be posting more updates as the week rolls on about my thoughts on the market, and then also about Chart TA as well. This is Cody the Coin Raptor, and I hope to see you in the next video.